If Parliament approves a slew of tax reform measures contained in 6 recently introduced bills, Ugandans should prepare for increased tax burdens and severe penalties for violations beginning July 1st. Among the bills that were presented were the Income Tax Amendment Bill 2023, Excise Duty Amendment 2023, Value Added Tax Amendment 2023, among others. The Uganda Manufacturers Association has requested that the Finance Committee lower some taxes, including the Excise Duty Amendment Bill, which they propose to be reduced to 6% on the grounds that majority of manufacturers have yet to fully recover from the effects of COVID-19 and the Russian-Ukraine war.
Mr. Chairman, our proposal in this regard is that the excise duty rate be lowered to 6%, or Uganda shillings 100 per litre, whichever is higher. And the justification for this, Chair, is that whereas it is noble to support localization of input sourcing, Mr. Chairman, we would want to see that this is gradual, otherwise it can result into distortions of the market. We are already grappling with issues to do with localization of industrial sugar sourcing.
The committee, on the other hand, has disagreed with the association, especially on the excuse of COVID-19, because according to them, some businesses made tremendous profits. The legislators insist that UMA has not presented alternative avenues through which government can collect taxes to sustain the economy.
VAT. How does COVID stop you from remitting your taxes? VAT is not you. Actually, most companies say we are taxpayers. They are not taxpayers. They are tax collectors. You collect money from me to remit to government. You stay with the money for that long. So, and say COVID. Where does COVID come in there? So I don't think the COVID excuse across the board on every tax really holds water.
What new taxes should we introduce that will help create jobs? So that you don't only concentrate here, what new taxes can you introduce on certain imports that is available that will support the manufacturers to expand production and then create jobs? Look at the tax arrangement in Tanzania, look at Kenya, and give us serious proposals. And we'll give you the necessary support, including giving you the necessary tax exemption that other foreigners come here. The smaller Ugandan informal domestic manufacturers, the household manufacturers, we expect you to dig in. But you are not bringing that proposal to us.
The committee also met members of Siatini in regards to the tax bills, and they cautioned government to review the tax exemptions. According to Siatini, Uganda Revenue Authority would be collecting over 30 trillion shillings in revenue, but tax waivers are limiting it.
Concerned with that harmful tax expenditures. We know that there are some that are really are going into helping the citizenry as well as the most vulnerable in society. But our effort has been and still is on the harmful tax expenditures, and where we note that government is losing over 20 trillion like in a year, yet we believe some of this money could be channeled to finance the budget.
If we get the money that is let out of the bag through tax reliefs and tax expenditure, that target would go beyond 30 million, which would 30 trillion Uganda shillings, which would help to increase our domestic revenue and improve our tax to GDP ratio. But the continued loss of revenue through tax expenditure makes it hard for us to improve our tax to GDP ratio.
The Finance Committee continues to consult various stakeholders in relation to the tax bills before they are put back in Parliament for reconsideration on July 1st. Samlanifa, Smart 24 TV, Business Today.